Hello, and welcome to another episode of the Market Pulse series. I believe this is the first one that we are doing in the new year. And in so doing, we'll be looking at the events that transpired for the week, most importantly, the events that transpired this afternoon. And once we're done with that, we do some technical analysis, try to understand the major chart patterns and technical analysis before we end the session. So my name is Rufas Kamau, markets analyst at FX Pesa. And as we all know, this is a one-of-a-kind session that happens on every Thursday at 8 p.m. So make sure to subscribe to the channel and you will get notified whenever we have a live session. So on this session, as we all know, we basically discuss various things, including market analysis, based analysis. But don't be mistaken, this is not, and in no way is it investment advice. It's not a recommendation to trade. So you should always do your own analysis, always practice proper risk management. So even though you see me doing analysis here on various charts, times are wrong. So that's why you need to do your own analysis. So hello, Robert. See the result TV in the house. So thank you guys for joining, and let's get things started. So I'll be starting first by saying the events that transpired this week are as follows. One, the major news was about Bitcoin. So what we saw with Bitcoin was that this week, the SEC, or the US Securities and Exchange Commission, was expected to announce the approval of Bitcoin, spot Bitcoin ETF, or even injection. So yesterday, or slightly before yesterday on midnight, we saw a tweet coming in from the SEC, basically saying that all the ETF applications, they were 13 in number, that they had been approved, and that caused out of volatility in Bitcoin prices. So if you go to the Bitcoin chart, you'll notice the big momentum that happened here. Price shooting up and then all the way down and then making recovery. This was within an hour. Then we saw the market dropping yesterday and then making a recovery. And then towards midnight, now this is the midnight that started today, we saw another big spike upwards, followed by a big spike back downwards, as the SEC officially announced that they had approved the 11 applications and rejected 2. And the difference between the first and the second announcement is that the first one is possibly a scheduled tweet that went out instead of waiting for the official announcement. So investigations were made, and basically Twitter said that the account was not hacked. So it's basically the SEC that had compromised the password. So with ETFs or spot Bitcoin ETFs now available, which started trading in the afternoon, we saw the price spiking to a 2-year high, and this rally went all the way around $8,955 per Bitcoin. So upon getting to this area, we also had other news. This is the US Consumer Price Index news or inflation report, which now we saw the price reversing and dropping back almost the same price level that the market went today. So there has been a lot of anticipation that once the ETFs start trading, then we should be able to see an acceleration of price in Bitcoin. And as a result, traders might see quite a good number of opportunities. So the current events currently happening today is that these ETFs have already been approved, but then there's excessive demand coming from clients that work with these financial institutions. So clients are basically calling or visiting the financial institutions and asking them for an allocation in these Bitcoin spot ETFs. So by doing that, what has transpired over the last couple of hours, 1 to 3 hours, is that these institutions are not able to secure enough Bitcoin to allocate for these clients. So as a result, there's been long queues as a result of those errors. We don't know why this is happening. Sometimes it may be that the ETF approvals happened long before the institutions could set up their trading platforms well and efficiently. But then there's also speculation that there is not enough Bitcoin in the market to fulfill the demand, and that should be a signal indicating that there is a potential upside coming. At the same time, there is also speculation that the exchanges that are supplying Bitcoin to these ETFs are basically holding the ones that start HOAR, holding, which basically means that they are suppressing supply so that they can benefit from the upside potential. So in a layman thinking, you would think about it this way. You're expecting the price of Bitcoin to go up. So why would you be selling as at this moment right now? Why not just hold on to your Bitcoins for a little longer? And if there's price acceleration, you get to benefit from that instead of the customer or the person you are selling the Bitcoin to. So that has been a big topic this afternoon. And as we head towards the close of the market, there's a good chance we will be seeing some form of price recovery in Bitcoin as scarcity continues to run high. So right now, the pullback seems quite interesting, and we could be seeing another interesting momentum upwards. So that being the major most discussed news in the markets, second major most discussed news in the markets is something that we comprehensively covered in the morning market snapshot series. And this is covered on YouTube. It happens daily at 11 a.m., where we went through the outlook for the US inflation report. So we looked at the core consumer price index. We looked at the consumer price index both monthly and yearly. And we had quite a number of speculations. So the expectation was that since the US inflation was at a 5-month low of 3.1%, there was this overall expectation that it would eventually increase to 3.2%. And since it's a lagging report, it's basically indicating what happened to the US economy in December. Then a lot of investors were expecting that prices went up slightly and the annual inflation rose 3.2%. So despite our expectations and analysis in the market, if you look at the economic calendar, you notice what exactly transpired. So the outcome showed that the month of December had a 0.3% increase in consumer price index, which was higher than the 0.2% expected and the 0.1% that was reported in November. So as a result, the annual CPI moved higher to 3.4%. And this, in comparison with the expectation and the previous number, was better than expected. So higher than expected consumer price index means that the inflation in the US is on the rise again. So when you see the inflation being on the rise again, it means a couple of things. One, it basically means that the prices of the goods and services in the consumer price basket are increasing. So the average American might have spent more money on the same amount of products compared to the same period last year, and of course, 0.3% higher compared to the same period last month. So the US Federal Reserve, or the Central Bank of the US, has been fighting high inflation, and it has a target of percent. So it wants to get this inflation number down from 3.4% down to 0.0%. So it's still a miss by 1.4%. So as a result, the actions or the fiscal tools that the Federal Reserve Bank of the US has been using include raising interest rates, which moved from 0.1%, a high of 5.5% in the last 2 years. So there has been speculations that the Fed will cut interest rates on the month of March, but then that was dependent on data coming from the economy. So one of the data points includes the consumer price index, which was expected to continue trending downwards towards the 2% target. But then from what we are seeing here, it's a change in direction, and now things are getting a little bit complicated. So we really got pros, especially on the July report, which came in at around what? This was 3%. So the inflation moved higher, got to 3.7%, then dropped lower to 3.1% last month. Now we are back to 3.4%, meaning that the target is moving. It's not getting the desired levels of percent. So knowing that the inflation is on the rise again, the Fed might consider holding interest rates higher for a longer duration of time, and this has various impacts in the market. So one of the impacts of these include the following. One is that the cost of capital will remain significantly high within the US economy. And two, the bond yields might remain significantly high for the better part of the first quarter of this year. So we know that there is a very strong positive correlation between interest rates and bond yields. So the yields that are paid on bonds tend to track the movement of interest rates. And in this case, we expect that the yields will be on the rise again as investors bet on investing in these bonds. So with yields rising, then drives what we call dollar scarcity. And when you think about bonds in a very simplistic way, you're lending money to the government and you get a piece of paper called a bond certificate. So when the government gives you back your money plus the interest that you are describing as yield, then eventually you give back the piece of paper and you get the money back. So if there is more and more investors investing in these bonds, then basically drives out dollar supply. So more money or more dollars out of the economic system and into the Federal Reserve. And as a result of that, we see dollar scarcity, which basically strengthens the dollar. So that's the background reasoning along this. So when you see the dollar being pretty strong against other currencies, one of the major contributing reasons is the high yields. So investor appetite tends to be really high, especially considering that the US is the biggest economy in the world. The bonds are the most trusted in the world. So as a result, an increase in yields attracts out of investors to drive the dollars out of supply. So in this case, seeing the inflation being on the rise again means that the Fed might hold rates higher for longer, which means that yields might stay higher for longer. And as a result, we might see dollar scarcity continuing to increase. And from the reaction on the news announcment, what we saw here was the dollar index basically strengthening. So you can already see that since the opening of the day, market went down, then it shot all the way down before rising all the way up. So we had discussed that the dollar index has been trading in a range for the better part of the year, save for the first day of trading, which was the 2nd of January. And now the dollar is on the verge of breaking this resistance and moving higher. So as a result of this, now you see the dollar strengthening against other currencies. We had projected that the best outcome would be potentially trading the dollar against a weaker currency, in this case, when inflation is on the rise. So the dollar made quite a strong rally against the Japanese yen in the first hour of trading after the news announcement. But then it has stalled. Nothing much happened after that. Then the continuation is expected as we head towards the end of the week. The dollar is expected to continue strengthening across board. So strengthening against the euro means the price keeps pushing downwards. So a potential break of this trend line could be on the books. So that's one of the bets. So for pound USD, you can see how the pound lost the dollar. The USD card continued to vary higher. So we had marked this as an area of interest, the resistance level. And once the market had broken that, then it basically means we look for bullish positions and continue trading higher as the dollar strength continues hitting the markets. So as for gold, we had projected big drop to this area. So the market dropped to the 2016 price level. So for anyone asking why it was 2016, we were looking at this support area as well as this other support area. So from the 1 hour chart, if I zoom out, you'll notice that there is a time that the market found support here. Of course, you can see that for the better part of this year, this has been the lowest price we have seen in gold. So in this case, we expect a breakout and a continuation for the back downwards and potentially get back to the 2000 price level. So there's quite a number of targets. There's 2008 and all the way down to this previous support. And this is 1975 price level. So if the dollar continues strengthening towards the end of the week, short-term target is 2006, 2000, and of course 1975. So for AUD/USD, this has been a major support level. But then you can see there was a time that the price formed about here, and the bottom was just around the corner. So after the price broke that particular support, then is now moving further downwards towards this area of 0.664. So as for US equity indices, they were on track to form higher highs. But then after the announcement of the news, now we know that interest rates might stay higher for longer. This is not very good for equities. Equities would benefit more if the cost of capital was lower. Then if the cost of capital stays higher for longer, then the equities stand to step back. So you can see the market erasing the early morning gains, erasing yesterday's gains, and now you can already see that, or even the Tuesday's gains are almost being erased. This was the opening price on Tuesday, so the market could get here and potentially proceed further downwards towards the end of the week as weakness becomes quite strong here. So the last 2 4 candlesticks are indicating a strong bearish momentum. So potentially we could see the market dropping to 16,545 and some further downside momentum to a previous low around 16,184. And that's for the Nasdaq. If you look at the Dow Jones, which has been quite volatile this year, we erased early morning gains, yesterday's gains, and now we are going for the Monday gains. So potentially, market could continue with the drop and eventually get to this particular support level. So SP 500, same stuff, erasing yesterday's gains, the previous day, and of course, now on track to erase the Monday's gains, which were pretty good for anyone who had just started trading in the year. So for Brent oil, I mentioned that we might be looking for potential short selling positions. So despite the strong bull run that happened in the better part of the day, now the price has started behaving. There's a potential to be seeing the price going back downwards. For European equity indices, as projected in the morning, they would be tracking the direction of the American indices. And as a result, we projected that the price would continue dropping. So for the French 40 index, the sharp drop has already hit the support level. This bottom, as well as this bottom, has already been hit. So if you had a short selling position, I think it's a nice area to make an exit. So for the European cash 50 index, the big drop, we already got to our support level. So now we wait and see what price does for this area going forward. And for the UK 100, this is the big surprising news in the market. The massive sell-off is kind of crazy. So you are expecting the market to at least drop and get to this support, maybe to even to this week here. So you can already see the shadow of this candlestick being a significant area if the market was to break this particular support. But then the acceleration downwards indicates there's more to the news. So there's an acceleration for the downwards, in this case implying that there is some form of panic in the markets. So in this case, some further downside momentum is expected. So if you have any questions arising from the presentation, I always advise that you type that in the live comment section and I respond to that right away. So hi, Robert, Francis, I can see Derek in the house. The effects of the CPI news on the market, I've already described that. Hi, Tony Dark. I can see Tron. You need a link to my Telegram group. This is my personal Telegram group, so I always issue that as a disclaimer. It's not associated with the FX Pesa company in any way. So there goes the link. Hopefully, we get to discuss more and discover trading and investment ideas in the group. All right. So with that in mind, I don't think there's much to say. Looking forward, tomorrow we'll be focusing on a couple of things. So as we approach the end of the day, we know that the CPI has weakened the dollar and strengthened the dollar and weakened equities. So I expect that trend to continue dominating the markets as we get into the Asian session. So in Sydney, Australia, these guys will be getting the news in the morning once they wake up, and this should be starting just past midnight, so around 1 a.m. Japan around 3 a.m. So in that case, we should be expecting some continuation of the trends. So going forward, tomorrow, which is Friday, we will be having bank lending data from Japan, current account data from Japan at 2:50 a.m. Chinese CPI data, as well as a producer price index, or what we call PPI, will be happening at 4:30 a.m. And this is expected to cause good volatility in the USD CNH or CNY currency pair. And of course, we'll also be looking at the GDP data coming in from the UK at 10 a.m., just before the next market snapshot. So the next market snapshot will be presented by Samson Sarah, who handles the Friday episodes. So at this point, I believe he's already preparing or cooking something to present for you tomorrow. So there will be more insights shared, more analysis, and potential trade setups. So as we end the week, there will be more focus on the producer price index in the US, which is basically an indication of forward prices. So when you look at the producer price index, you basically expect this to be a leading indicator of what you might expect in the CPI over the next period. So it basically measures the price of finished goods and services that are sold by producers. And once these products are sold, they eventually end up with retailers. So goods are first sold by producers, maybe to wholesalers, distributors, and so on. Then these wholesalers, distributors, then sell these products to consumers. So when we are measuring consumer price index, it's more like an extended function of the producer price index. So it will be a good measure to show the expected price action in terms of retail prices, and as a result, the signal of what might happen to the CPI over the next month. And as a result, we expect increased volatility in the market coming in from the producer price index data. So that being said, I think the chart of the day, the one chart you should be focused on, should be the FTSE 100 or the UK 100 index. If this is just an overextension of price, then the reversal is bound. But then if there's more fundamentals supporting the big sell-off, then there's still more downside. And as you can see, support is all the way down. The most recent support along this price action is around 7,547. So there's still more room for downside momentum. And of course, as we approach midnight, we know that the volatility is expected to die out. But then this seems to be pretty strong. So it's something that we cannot ignore. So for gold traders, know that there is a big downside momentum. But then this was a major support. So you expect the price to struggle breaking that area. But then if we know that rates are going to stay higher for longer, then gold prices could continue dropping and as a result, eventually break this level. So I would be observing the 2016 price level, $2,016 of gold, to see if there's that potential of the market continuing to drop lower. So observe this area, look for evidence, and if there's evidence of the market breaking and going lower, then in that case, you might consider going for short selling positions. So in this case, if I remove all these analyses and we just focus on the candlesticks, so then it's very clear on the forward chart that this is a chart on a strong bearish momentum, and all you have to do is to be patient and look for the right entry. So if you break past or below this support, there's still more room for downside, And from the 4-hour chart, it seems like this is an immediate target of around 1977, also 1975 to be precise. So that's it for the day. US equity indices are reversing. So from the 4-hour chart, there seems to be some good, nice setups for short selling opportunities. So in this case, if rates are going to stay higher for longer, then we might as well continue shorting these as we bet on a much stronger dollar. So hello, James, and thank you for joining the session. I appreciate having you in the space. James, basically, is my colleague. I work with him. He runs the Kitengela office. So you should know that the Kitengela office is open from Monday to Friday. So if you are within the vicinity, you should visit the office and get some of the good lessons and analysis from James. Hopefully, you will get to improve on your game. We have 10-year bond news at 9 p.m. How will they affect the market? I think the current events, as I discussed at the beginning of the session, are majorly focused on what's currently happening with Bitcoin. So everyone is talking about Bitcoin as well as the CPI news, and those are the two major events that we have discussed today. On the other hand, the potential for market moving as a result of the 10-year bond sale might be as a result of either oversubscription or undersubscription. So unless there's oversubscription or undersubscription, I don't expect the news to be causing any major headaches. There's news of Iran seizing oil tanker in Gulf of Oman. I haven't checked that. But I believe it's something that has some potential to move oil prices. So from what we are seeing here, I just mentioned just the other minute that from Monday, I've been looking for short selling opportunities. But despite this upwards momentum, if you timed the price and looked for short selling opportunities as we got closer to the upper trend line, this is $79.133 per barrel, then any short selling opportunities tend to be easily profitable. Of course, we saw the crude oil inventories yesterday being higher than expected, and with higher supply, there was a big selling opportunity, which happened within like 3-4 hours. Now we can see something similar happening. So it seems like a consistent trend. Every time the market goes up, investors find a reason to go short. So I don't see any fundamental supporting bullish case for oil. So if it's true that some tankers were seized in the Gulf region, that should have been bullish for the oil markets. Then from what we are seeing, it seems to be strongly bearish. And this is as a result of the long-term fundamentals coming from the market, where supply is increasing and demand is not increasing at the same pace. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session.